Hi, my name is Matt Amberson of Option Research and Technology Services, and today we're going to be going over a few of the features of the Implementor backtest and scanner. So the first thing you do when you get to the Implementer is choose an overall strategy. So we'll be looking at our favorite selling calls in Diamond. So simply click on that report and click Generate Reports, and you will see the information come down in the report section, and it's sorted by the highlighted column dollar profit 2007 to 2013, which means the average profit for that period. The way that we approach this back test is that we trade 100 contracts per day every day, and in this case hedge delta neutral, taking out the movement of the underlier effect that it has on the back tests, and normalize that profit for each trade that we make to a 30-day average holding period. You can see that this particular strategy has a 17-day average hold, so it would be roughly multiplied by 2 in order to get to the 30-day adjusted of $5,905 average profit adjusted to 30 days for every trade from 2007 to 2013. The strategy for selling call is explained in the right up here. Diamond short call, the top one we sell in month 1, delta 50, hold to expiration, or unless the delta goes under 25. So not only are we testing maturities month 1, 2, and 3, and delta ranges 50 down to 10, but we're testing holding, or another way to say it is when to exit a particular trade. So for this one, you would exit after having sold a 50 delta call. You would buy it back when the delta goes below 25. So this is sorted by profit from 2007 to 2013. You could also sort on profit for a particular year. Let's just pick 2012, regenerate, and we could, it's sorted now still by 2007 to 2013. We could sort it by 2012. And then I'd like to also show you a new enhancement that we've done, is the ability to sort it on quarters. Now you could pick your quarters, or you can look at the performance of both the stock movement and the volatility movement in that quarter by clicking on quarterly market returns. So when you click that tab, it goes ahead and it let's take away this background noise. It goes ahead and shows you the returns for the diamond here for each quarter, and you could also sort based on the stock movement. So let's say we want to see the performance of these strategies for selling calls in times when the volatility is up the most. For example, in 2007, 2013, you merely drag the main ones here, right click, and populate the quarters. So now when we go back to the reports, we'll see that these quarters are highlighted. We'll regenerate the report and see that these quarters, 2007, quarters 2 and 4, 2008, quarters 3, and how the performance of the test has done just in those quarters. So we could sort on that and find now that, lo and behold, the best performing strategy is the 50 delta exiting at 25. So there's a third way then to look at profitability of the back test, which ORATS has termed TOES, stands for Tested Option Environment Strategy. So in some environments, some different approaches to trading do better than others. So right now we characterize the market in diamond as high in diamond and low volatility. So what we would do then is that's the current price. So HSLV stands for high stock, low volatility, and then we would now find the best one that performs in this environment by sorting it. The best one in this environment is month 1 delta 45 hold 15 days, but we might not be satisfied because it's too low in the quarters that we like. So there's a way that you could then say, well, let's do some type of averaging or such. So we could save this report. We could save this as an Excel-based CSV, or I should say, where we could open it into an Excel sheet and do some manipulating of the data in order to find our favorite type of trading strategy. Or we could also then go back and change the toes from high stock price level to maybe a medium stock price level, regenerate the report, sort it based on that, and see that now it's month 3 that performs well. Again though, but it's not performing too well on the quarters that we have chosen. So what we might do is sort it by the quarters and find some profit levels that are acceptable. Maybe something in this range where you might sell month 2 delta 50 hold to expiration, or if the delta goes down to 25. Another thing we could do is then we could graph this particular strategy, and what it will show is the equity line for month 2 delta 50 and exiting at a 25 delta. So as that pulls up, we can see the equity line here. I'll resize it to fit in the screen. Pretty good looking equity line. And what you could do then is to see the stock price overlay. So for the diamonds, we will see that 2008, when it had its drawdown, the market came down pretty substantially. Another drawdown here for the stock price, but it basically mirrors the month 2 equity line here. You could also overlay the toes. How well did the particular strategy do in a high stock price, low volatility environment. I'll uncheck the stock price here so it's a little bit more clear. So every one of these dots represents a profit from when the toes environment had a trade that put in that particular bucket. High stock, low volatility. I could also look at high stock, medium volatility, where the current toes is, and see that's a relatively high performing toe strategy. And then the profitability averages are represented in the legend over here. So lastly, what I'd like to show is that we are now able to generate options based on the selected strategy. So we're going to look for diamond shorts month 2, where there's a 50 delta or around a 50 delta. So you can see the deltas here: 49, 49, 57, 55. So there's a range around the 50, and they're sorted by the forecast ratio. They're all pretty equal here, but we have a theoretical volatility that ORATS does a projection of volatility and then compares that to where the market is, and returns this particular month is undervalued by ORATS. We think that the volatility should be 11.2. It's actually 10.1, but still it shows, even though you can't see it here because they're all equal, that's how it would be sorted. So another thing that you could do with this is save these options. So it saves it and it marks it up. It's 1333 here, a diamond, a short call, month 2, delta 50, with the exit advice of when the delta goes below 25. So you could save that particular option file and then go into the positions tab here, browse for that file, and what it will do is upload into the Implementor Positions tab. I could then update positions and see if this is an exit yet, which it won't be because we just got in, so it says no. And then you could even click on it and say the exit would be when the absolute delta is less than 25. So this is a good way to be able to monitor trades that you have already done, or you could upload your positions into this type of format, and it will be considered for the exit that you have entered into the file. So that wraps it up. Again, we've added the quarterly market returns in here and the ability to save these reports. If you have any feedback or questions, please email me at matt@orats.com, and thank you very much.